weekend. Ira Epstein with your weekly SPDR ETF video, and this is for Sunday, December 7th, 2025. We still don't have my studio set up. I don't know if you're aware, Chicago, where I'm at, Indiana, the northwest section got hit by major snow. I think we got 6 inches out here. So could not get our people out to set it all up. So just one of those things, but I can still operate. And that's the important thing because I have my internet and I'm not working on a hotspot anymore. There are no major U.S. economic data reports due out tomorrow. So this is going to be a week where the market sits back and tries to figure out what is the Fed going to do, and whatever it does, how many more rate cuts are coming. So the big event come Wednesday will be the dot plot and the reaction as to what Fed Chair Powell gets the Fed members to do. Right now, the market is betting very heavily that it'll be a 25 basis point cut and then maybe a pause after that. And then the question is how many more cuts for 2026. So that's where I think you're at. I looked at Rivian, and I do think it's worth us looking at because the market has come up and it's now starting to get back up to the old high numbers. Now, it's got a ways to go, don't get me wrong. This chart, as you can see, way back was 26.94. I can go even further back here and get you up to even higher prices. But what's the difference? The point is the market came down, played around this low area, found a base, after losing 2/3 or so of its value recently, and has been coming back up on a weekly basis. The trend is up. As you can see off the swing line, you have higher lows and higher highs. That is bullish. When you look at the moving averages, the market made a stand against the green line, which is the 100-day average, and I'm sorry, not day, 100-week average, and the 18-week average in red. Next resistance point, one of them, is right here at 1949, which is the 200-week average. It's already over the Bollinger Band, so I think if it got up to that number, I think you'll see a lot of people wanting to just call it a day and take some money off the table at this point. When we look at slow stochastics, you're overbought. You have an overbought market that is now spending some time running the Bollinger Band. Don't be surprised if it pulls back down to it. But the question is, what can it do if it can make a run to the 200-week average? I don't know. Overbought doesn't tell me a lot of new money will come in. On AMD, this is one of these computer chips that came down pretty good. Here's a market that was up, as you know, to 267.08. It lost almost $70, came back to the 18-week average of closes, held it, and now the market's got to make a decision. What is next? It'll be ugly if you get under 194.28 and close under that number. That would be an ugly look to the chart. We're pulling back in Ensign Group, and again, this is elderly care and the like. I look for support to start showing up again at 175.28. That's not a buy signal as I see it, just an area to look for support. Cleveland Cliffs, well, it's all over the board here. Higher highs, and then it came shooting down, got under the 18-week average, as you could see, stayed there for actually 3 weeks, and now it's come alive. It's going to have trouble, I think, between the 100-week average and the upper Bollinger Band, and I don't see any signals that are screaming, go in, go out. I've said over and over that I like Rocket Mortgage, and I started saying that, as you know, at the beginning of the year, as I was looking at the market to come alive, as I believed the Fed was going to cut interest rates, and that would ultimately help the mortgage market. Well, the problem is prices kept going up, and the reality is the longer end of the market isn't responding to those cuts on rates. Really not. You're still at a high rate. Mortgages are still over 6%. 10-year notes aren't falling that much. They've found sort of a home near 4% temporarily. So we'll see what it does. What you don't want to see is the market get under the low right here, the week of November 21st, in my opinion, and getting underneath 1607 opens the door to get back into this zone, the 1524 to 1487 level. In Home Depot, it's still like Rocket, got its problems with, do people have money? Can they do the renovations? How many builders are really getting aggressive? Their commercial end of the business, what does it look like? These are the problems that are facing Home Depot lows. I saw that I think it's called National Builders, declared bankruptcy over the weekend. They work in the Midwest, and they work with a lot of companies there that buy commercial goods. And I'm talking the commercial goods for building. In Uber's seen its low near term. It held the Bollinger Band, and it's now fighting a battle back at the 18-week moving average of closes. In Lucid, since I covered Rivian and it's looking good, you can see Lucid isn't looking good. Lucid's coming down, making on a weekly chart new lows for this move, so it still hasn't come alive. It needs a product. It's really that simple. So it's got to get something that's a lower price product. In XLI, as you take a look here on this chart, and we take a look at the chart, the last high was 155.54. You missed it by 7 cents this week. Will we go up and take it out? That would then give us a trade bottom in here. So it's very important coming up here. On the energies, Russia keeps bombing away at Ukraine, hitting all the power sources it can in the country. I don't see a peace deal coming. And if you'll notice, you didn't even hear about it over the weekend on Face the Nation and other things of that type. So what I think is really going on is Europe's going to have to deal with it, because I think the U.S. is pretty much washing its hands. That doesn't mean we won't help Europe. It does mean I don't think that the president wants to take on Russia. And that's the interesting thing. He's shown an aversion to doing that for a very long time. In UUP, we have a higher high and a lower low on the dollar. So what gives here? Well, the market's still embedded. If it loses the embedded reading, then we're opening the door to go back to the 18-week average. Right now, that's 27.75. Obviously, a lot's going to depend on what the Fed not only does, but what Fed Chair Powell says in his press conference and how the market responds to that. In the gold market, it is still central bank buying. It is still investor buying. Unlike Bitcoin, which has taken a whopping, this hasn't. We backed off from the highs. And now the question is, what's the next move? You are overbought. Trend is up, but buying into an overbought condition is never the best thing for your health. As you know, this week I was talking about the fact that Goldman had come out with an announcement that their analysts didn't think gold could hold these levels. So gold responded by going to an all-time high. And in London, there's been really aggressive buying at the London Metal Exchange for copper as people are locking in supplies for 2026. That's really all I have on that. So I hope you enjoy this. I will be with you during the week. I appreciate that many of you took advantage of the sale that we had that is over now. And Christmas is coming. We'll have one more for you then, and then you're sort of locked out for a while. So save your pennies. Join us. I'm Ira Epstein. Have yourself a great weekend.